Good evening, everyone. This is Wayne, and this is a special edition of the Trade Report for Friday, March 23rd, 2018. Well, the Dow and the S&P found their way into correction territory today. Stay tuned to find out more. Greetings, everyone, and thank you once again for spending a little bit of extra time this week in this special edition of the Trade Report for Friday. I normally, of course, don't record a video for Friday, but the events in the markets today were such that I felt it was warranted to come back and provide a report just to kind of get everybody up to speed and also to give you my thoughts and ideas and theses for Monday's market, which at this point is looking like it could be a repeat performance of August 24th, 2015, which was an extremely powerful move to the downside in the market. So just real quick, as we go over the market here, let me start up a piece of software that I neglected to start up before I got going here. I apologize for that. I want to make sure I have all of my writing tools that I need. There we go. So last night, after the market just exploded to the downside yesterday, and if you didn't see the last night's video, please watch Thursday, March 22nd's video, which is available here. But we started selling, and we actually continued to sell with a little bit of moderation, and then finally a big dip to the downside. And then we kind of came up and went a little bit flat until the European markets opened, and then for whatever reason started to recover, and then decided that the recovery may not necessarily be what they wanted to do. But then they decided, yeah, we think we do want to go a little bit higher. And then we went sideways into the open of the US regular session. Well, we had a little push to the upside. We ended up lower. We went sideways for about an hour and a half. And then the market started selling. Now, this is very, very indicative and replicated from what happened yesterday. A little bit sideways, a little bit up and down, and then we went down. Then we went up when Trump started to speak yesterday and rolled around, went up again, and then, as you know, we went down into the close. Well, that's exactly what happened today. Trump came in, started speaking, and talked about how he was, in fact, going to sign the spending bill to keep the government open, so we wouldn't have a government shutdown tonight, which that's a good thing. But as soon as we got through trying to go higher, which is exactly what we did yesterday, this market already had made up its mind, apparently. And that's my opinion on what's going on. This market was going to go lower anyway. And I talked about that in last night's trade report. This market just has its sights set on going down and testing the February lows. And so after it made up its mind to do what it set out to do, which was to go lower, it really just made no bones about it. And then the last 2 hours of trading, we did nothing but go lower. And it was dramatic. It was a very, very powerful push to the downside with a big push to the upside in volatility. And I will obviously show you a chart of the VIX. I told you yesterday that I was expecting the possibility of let me move my watch list over, a possibility of the VIX getting up to approximately 30. Well, or was it, let me take a look at the chart real quick. I do remember that I was talking about it reaching a particular level. Now, it did trade, or shall I say, it did close off of its high. So it didn't make it up to this 1272. It only made it up to that first level today. Now, if you recall, I was talking about the fact that we had that big push up yesterday in the VIX, and that I was looking for a move up to here, but that I was also looking for a secondary move up to here. Now, that would have been the perfect storm if we did do this today. But the fact that we made it this far, but then pulled back, actually gives this market a little bit of an opportunity to go through an evaluation of sorts and make a determination as to how it's going to accomplish its next feat, whatever that is. I am not discounting the possibility that this market goes higher on Monday. I'm not discounting that possibility. I don't think it's the higher probability direction. I do think we're going to go lower on Monday, and like I said, I think we're going to have the potential for a copy or a replication of the August 24th, 2015 Monday open, where the circuit breakers were triggered and the market actually had to come to a stop and not trade for 15 minutes. And so, or was, well, maybe it was 5 minutes. I can't remember. Anyway, it was remarkable. I did trade that. It was, I think it was the second most profit I made in one day, was trading that down move. It was unbelievable. And you're going to hear something rather strange. I actually made money. I made the money that I made on the upside that day, because when it hit the low, it bounced off like a trampoline and just went screaming higher. So at any rate, this is what I'm looking at. I'm looking at the market continuing to go down, and I'm also looking for volatility to go higher here. So that's, two sides of the same coin. So on Monday, well, actually the markets open up Sunday. They open up, the futures markets open up Sunday afternoon at 3 p.m. Pacific Daylight Time, 6 p.m. Eastern Daylight Time. So we'll see how whatever has happened between now and then is digested by the market and is interpreted by the market and ultimately is acted upon by the market at that point. And we'll know more, obviously, when the market starts to trade. Now, there are a couple of things I do want to show you that provide kind of a case for both sides of the equation. And we just got, oh, that's okay. That's because I just changed the chart. So this is a chart of the Dow Jones Industrial, Dow Jones Industrials. And as you recall, I told you that if we had another down move like the one we had today, well, if we had, I'm speaking as if I'm talking to you today about yesterday, that we would have come down, tested the February lows, and actually come in contact with the 200-day moving average, which we didn't get all the way down to. Now, I'm going to show you another chart, which is the S&P 500, and it did come down to the 200-day moving average. Now, there's a bit of a rumor, if you will, that's going through the market and going through trading circles that says, well, because the S&P came down and touched the 200-day moving average, that provided a technical level of satisfaction for the market, and it actually bounced up a little bit off of that low. So in essence, what that means is the market was saved from any further downside in today's session. However, given the fact that the S&P is the only index that did test its 200-day moving average, and every other index, the Dow, the NASDAQ, and the Russell, all have not tested it yet. And no index has actually come down and retested the February lows yet. And we did close on our lows of the day in every index. So the only thing going for that school of thought that says we might go to the upside on Monday is the fact that the S&P came down and touched the 200-day moving average and bounced just a little bit. So the fact that the S&P had a technical bounce is giving some hope to the bulls, but the bears are still, oh my gosh, they are so alive. If the bears were concerned about not going lower on Monday, there would have been more of what is known as a short covering rally into the close today. And a short covering rally is when people who are short the market, they are trading with positions that are designed to benefit from the market going lower. If they're concerned about the market recovering, then they buy those positions back to close them. And when that happens, the market goes higher. Well, that did not happen into the close today. What I will show you, however, is, and let me get it a little more vivid for you. Um, this candle right here, which is this green candle, which is an up move, but it comes in the final 15. It's the cash market close. So that will indicate that there was some short covering, but the regular session basically closed on its lows. This is institutions and professional traders and people who aren't associated with the usual retail routine of the market. So these are people who are coming in, these are traders who are coming in after the regular session close and basically trading an additional 15-minute session after that. And a, a reasonable amount of that session was spent getting bought, which means that shorts were covering in that session. But that represents an extremely small percentage of this, which is this enormous down move that we had. In fact, let me just give you some numbers about how far that was. Our high here was 26, call it 2650, and our low was 2586. So we had a 66-point down move in the S&P, and that wasn't even from the high of the day. The high of the day was the opening candle. But in the great scheme of things, what you do is you take how many S&P points that you're calculating and you multiply that by 10, and that gives you an approximate number of Dow points. But the Dow did not close as low as the S&P or the NASDAQ today, comparatively speaking. And the reason why is there were a couple of issues in the Dow that actually traded higher. One of them was Boeing. Boeing actually traded all day in the green today. There was an emphasis placed on the defense sector today. And I don't know if it got a buy recommendation from an analyst or what, but Lockheed Martin, Raytheon, and Boeing all closed in the green today, and they did pretty well. So that happens periodically, but it kind of skews the comparison between the indexes. So on Monday, as I said, what I'm looking for is a continuation of this down move. And if we take a look at the S&P again, and this will be how we kind of wrap things up. Oh, actually, I do want to show you a chart of Amazon. But this technical bounce off the 200-day moving average, we could very well open up, we could gap lower. In other words, the market could open up lower than the close on Sunday afternoon, actually. And I do expect a retest. I just do. Now, it's just, and again, I mentioned it yesterday, call it intuition. call it just that experience that is looking at a market that looks like it's not quite done doing what it's set out to do yet. And there have been so many contingents of traders and market participants that are calling for this retest. It almost feels like a foregone conclusion. But I mean, nothing ever is in the financial markets. However, as I viewed the markets yesterday, the probability of the market moving lower today was so profound, and I know I made a strong case for that. I'm making a similarly strong case for that for Monday, which technically starts on Sunday, the futures markets. So that's where I'm kind of basing all of this. I don't think the markets are going to be subdued and happy and relieved and relaxed and in a place where they're going to feel like, okay, we're done. Now we can go higher. That is difficult to resolve in my trader brain. I just don't think that's going to happen. So at any rate, I think lower prices on Monday. I think we at least try to retest the February lows, and we don't have to do it all in one day, although it looks like we absolutely could. And for all intents and purposes, there's a case to be made for the fact that maybe we should get it done. Get it over with. There's still a lot to be dealt with in this market, and we're heading into earnings season. So, we want whatever this market is attempting to accomplish to be all said and done by the time that companies start delivering their earnings reports. And on that subject, the 1st of April is going to be the week after next, the first week of April, I should say. And that will begin earnings season. Now, on the subject of next week, next Friday is Good Friday. So the market's only open 4 days, and options expire on Thursday next week because the market is not open on Good Friday. So that, of course, means that next Sunday is Easter. So the market gets a day off for, well, it's technically Good Friday, but it's the Easter break, Easter holiday, whatever you want to call it. And I think going into the end of the month, end of the quarter, which is next week, I think we have that sell-off that brings us to a test of the February lows. Then I think we start getting bought again. So, we'll see how it all plays out. That's my thesis. That's the energy of this market as I see it. And I am positioned accordingly. So I am practicing what I preach, if you will. So with that, I appreciate you listening to this special trade report for Friday, March 23rd. And I just want to make sure that you know that this trade report, as all trade reports, are brought to you by TradeAlerts.com, where we let the market come to us. And yes, that is my website, and that's my membership website. And I'll be making some changes on that because I want to make my environment where I engage with all of you in a live market setting as approachable and as accessible as possible. And I'm looking at the price that I'm charging currently, which is reasonable because $97 a month, which is what I charge for that, is much more than you will make by learning and convening and being in a community of other traders and someone such as myself who does provide market direction and market education, I guess is the best way to put it. So at any rate, like I said, I understand that $97 a month isn't cheap, but at the same time, I want the ability for everyone, regardless of what their circumstances are, to be able to access this room. There will be a fee, but I haven't determined what that fee is, but it will be significantly less than that $97. So stay tuned. I'm going to be having a conversation and a subsequent work session with my website developer, and we're going to implement a different pricing structure. I want more members, and I want it to be a sustaining community that kind of develops its own, kind of takes on a life of its own. That's what I'm trying to say. But I still need and want to be involved, and by extension, what I'm doing and what I've always done, but I'm making it more of an overt component of what I'm doing, and that's providing one-to-one trader coaching. Now, I've mentioned that a couple of times in the past, but I'm really placing an emphasis on that now. I've had more and more people reach out to me and want that coaching, so I want to make it available. I love working with people. I love working with fellow traders, and I especially like working with people who are new to this because it's very important to work with someone who has experience and knows how to work with someone who doesn't have experience, but yet is excited and anticipating getting involved in the markets. And there's just a lot of things that need to be made aware of before that, and there's certain skills and abilities that need to be addressed and conversations that need to be had, and the whole 9 yards. The learning curve is steep, suffice it to say. So anyway, I just wanted to make you all aware of that. But for now, it's Friday afternoon, Friday evening. The markets are closed. They'll be closed for about another 47 hours, 46 hours, no, 47 hours. And then they'll reopen, and we'll see what they do at that point. So until then, have a great weekend. And of course, good night and good trading.